Hello friends, a very warm welcome to my channel. In this video we are going to do the analysis of Rain Industries, which is a very popular stock, one of the biggest multi-baggers for Monish Pabirai. So we are going to do the complete fundamental analysis in depth, and if you are new to the channel, please do subscribe and hit the bell icon, and if you are not a part of our Telegram channel, do join right now as we discuss a lot of interesting stuff on the Telegram channel and also share the market view daily. So let's get started. So Rain Industries is world's largest producer of some carbon products like calcined petroleum coke, which is CPC, and coal tar pitch, which is CTP. It's a vertically integrated company. Mainly it uses the waste released by some manufacturing industries, upcycles them and makes them into different raw materials for other industries like the metal industry. So it has 8 manufacturing facilities across 3 continents, and in products like coal tar pitch, which is CTP, it is world's number 1 producer, and for CPC it's world's number 2nd. So you can understand the scale of operations of Rain Industries. It has manufacturing operations globally, as these products are not feasible to transport across the countries, so it has local manufacturing units across different countries. Totally it has 16 manufacturing units which are spread across 3 continents and 8 countries. It has more than 2,400 people working with them. So they started their operations in 1998 in Visakhapatnam, and the company was called Rain Cancelling Limited. They started manufacturing canceled petroleum coke. In 2005, they doubled their production capacity to become the 5th largest globally for canceled petroleum coke. And in 2007, they merged another company called Rain Commodities Limited with this. In 2008, Rain Cements Limited was started. They entered into the cements manufacturing business. This unit was set up in Kurnool, Andhra Pradesh, with a capacity to produce 1.5 million tons of cement per annum. In 2013, they did a key acquisition. They acquired a company called Rutgers, which was the world's 2nd largest coal tar distiller. So by buying this, they entered into a new segment which was related to the carbon products. In 2014 and 15, they continued expanding their capacities. In 2016, they completed a greenfield expansion of a distillation facility for coal tar, which was set up as a joint venture with a Russian company. In 2019, they set up another CPC plant in Vizag. In 2021, they continued adding more products to their value-added portfolio. So you can observe that throughout their journey, they have been continuously doing capex, acquiring companies and growing inorganically, as well as they have been diversifying their product portfolio into basic commodities as well as the value-added products. Mr. Radhakrishna Reddy is the managing director of the company. He has more than 50 years of experience in this industry, and he's been with the company right from the inception. The management of Rain Industries is considered very ethical, and they have a very good reputation in the industry. Now let's talk about the business of the company. The business of this company can be broadly divided into 3 segments. The first segment is related to the carbon products. The second segment is related to the value added or the advanced materials, and the third segment is their cement manufacturing unit. So let's talk about the first segment in detail. Their main product in the first segment is CPC, which is calcined petroleum coke. So this material is manufactured from another material called GPC, which is a byproduct of the crude oil refining industries. The company has manufacturing capacity of up to 2.4 million tons per annum for this product, and this product finally is consumed as a raw material by the aluminium industry. So a majority of sales of this company is linked to the aluminium industry, as CPC is one of their main products. If you look at the value chain of this product is manufactured from green petroleum coke, and through the calcination process there are 2 end products manufactured. The first one is calcined petroleum coke, which goes into industries like aluminium, steel and titanium dioxide, and during this process the company is also able to generate electricity or steam, which is used by various industries. The second main product of this company is coal tar pitch, which is CTP. Now let's understand the value chain of coal tar pitch, which is CTP. Coal tar is used as a raw material, and through the process of distillation there are various products produced like coal tar pitch and other carbon products like carbon black oil and other oils, and some value added products like naphthalene is also produced through this process. Now where are these end products used, or which are the industries which are customers for Rain Industries? The coal tar pitch is used by aluminium industries, graphite industries and the refractories. The carbon black oil and the other oils are used by wood treatment industries, pigments and printers, and the naphthalene produced in this process is used captively by Rain Industries to produce other downstream products on its own. In coal tar pitch, the company has a capacity of about 1.5 metric tons per annum. So among the other products, naphthalene is used in the construction industry and also as dispersants. The aromatic oils and the carbon oils are used by various industries, and the carbon black oil is also used by the tire manufacturing and rubber manufacturing industries. So as you know, Rain Industries does the calcining process to manufacture their products. During this process, whatever steam is released, Rain Industries uses that steam to produce energy or electricity. They can produce up to 112 megawatts of electricity, and this significantly reduces the carbon footprint of Rain Industries. The next category, the second segment which we talk about, is the advanced material segment or the value added products. Among the value added products, they manufactured a product called Carboris. This product is used in the refractory and the graphite industries. They also manufacture a product called Petros. This is used in the lithium ion batteries. In the category of their advanced materials, they have a capacity of up to 0.65 metric tons per annum, and gradually this segment of advanced material products is increasing the share in the total revenue. The company also produces chemical intermediate products like BTX and others. These are used in various industries like solvents, inks, paints, etc. Another segment of products which the company manufactures are resins. In resins, again, they have different varieties. The first variety, which is the coal tar based resins, these are used in manufacturing industries like coatings and rubbers. The petrochemical resins are used in adhesives and printing. They are also into phenolics, which are used in leather treatment and pharma industries. Now from this picture, you can clearly understand the value chain of the advanced material products which Rain Industries manufactures. So the output which is released from the other two segments, which is the carbon rich feedstock as well as the coal tar distillates, both of these get combined and Rain produces the downstream products which can be categorized into three segments, that is the engineered products, chemical intermediates and resins, and these are used in various industries like tires, adhesives, printing inks, coatings and various industries. So what is Rain Industries doing? They are using the byproducts of other industries and manufacturing their products which are carbon based, and the same while producing the carbon based products, whatever byproducts are getting released, including the steam, they are using these byproducts to manufacture advanced materials, and steam also they are using to manufacture or produce electricity which is used by various industries and their own consumption. So in this way, Rain Industries is a upcycle industry which is very environment friendly. Another segment which is very popular in South India for Rain Industries is their cement segment, and their brand called Priya Cement is quite popular in India. In this segment, they manufacture both the varieties which is OPC and PPC cements, and they have a production capacity of 3.4 metric tons per annum. Now let's talk about their segmental revenue to understand which segment is contributing how much to their total revenue. The advanced material segment in 2021 is contributing almost 23% to their total revenue. The cement segment contributes 9% and the carbon segment contributes 68%. So still the majority of revenue comes from their carbon segment. In terms of industry, if you understand, their products are getting consumed majorly by the aluminium industry and secondly by the construction industry. Other than these, it is well distributed across various industries, as you can see from the photo. Another thing to note is that Rain Industries follows the calendar year. They don't follow the March ending year. They follow the December ending year. So the entire discussion in our analysis will be based on the calendar year for this company. Now from this picture, you are trying to understand what is the growth quarter on quarter in terms of volume as well as in terms of the increase in prices of the products which Rain Industries manufacture. So the vertical bars which you see is the volume, and the line charts which you see is the prices of the products. Starting with the CPC, which is calcined petroleum coke, which is the dark green bar, you can see that the volume has remained almost flattish. Then the second product, which is CTP of the company, which is the yellow bar, for this also the volume has been flattish. And the third product, which is OCP, again the volumes have been flattish. So in terms of volume, you don't see a steady growth in terms of volumes in the last few quarters. But when you look at the price is steadily increasing. So the main contribution to the growth in the revenue is because of the price rise, but the volumes are more or less range bound. So as the prices start to decrease, there would be a significant impact on the revenue of the company. That is the point I want to convey. Now let's talk about the advanced material segment of this company. In this also you observe a similar pattern for the engineering products, which is the green color, and the yellow one, which is the chemical intermediates and the resins. the volumes are more or less range bound and the prices are steadily increasing. So again, for this, the main contribution to the significant rise in revenue in the recent quarters would be because of the increase in prices of the products and not because of the volume growth of the company. Now let's talk about the industry in which Rain Industries operates. It's a cyclical industry. If you observe that for a few years or a few quarters, there is a boom in the consumption or demand for their products, and again there is a downturn. So you have to keep this in mind, that you will not find a consistent growth in terms of volume in such industries. India is one of the major producers of these products after China. So because of China plus one strategy, India will get tailwinds for this industry. Specifically talking about the calcined petroleum coke, which is the CPC, worldwide the production in calendar year 2021 was about 30 million tons, and out of this 77% was produced by China and North America, these two countries itself, and these two countries contribute for almost 63% of the global demand. So you can see that the production is concentrated in these two countries for this product. This for CPC in 2021 the demand was about 29.9 million tons, and going further up to 2025 it is expected to grow to 31.8 million tons, which is just 1.5% CAGR. So the industry is not growing that well. Another thing which you should keep in mind is, in this industry a lot of times various countries like US or India, they impose lot of trade restrictions or sanctions on the other countries. So because of this, if there is some sanction imposed by India on import of GPC, there have been instances in the past where Rain Industries has suffered because they are not able to get the raw material from abroad. So these kind of decisions taken by various countries impact the industry and the companies operating in this industry a lot. The second product we talk about is the coal tar pitch, which is CTP. The global demand for this product is roughly about 7.5 million tons in 2021, and this can grow up to 8.3 million tons by 2025, which is just a CAGR of 2.4%. Again, this industry is also not expected to grow very fast. Globally, if you see, India is the second largest producer of cement, which accounts for almost 7% of the total world capacity. And in 2021, Indian industry's capacity is close to about 550 million tons, which is expected another 80 million tons will be added in the next 3 years. So overall, you observe that as this is a cyclical industry, we cannot have great tailwinds from industry point of view, and the growth in terms of CAGR expected in the next few years is in low single digits. Now talking about the competitive edge of this company, the company has global presence, not in just terms of exports. They have manufacturing units spread across 3 continents, 8 countries and 16 manufacturing units, which is not possible for a new company to set up so easily. They have large scale operations which gives them cost efficiencies and make them one of the lowest cost producers in the world. So somebody who is buying from them at their cost will continue to buy for a long period of time. The management team is experienced. As you see, the promoters have more than 5 decades of experience, and they have vertically integrated their complete value chain, right from the production of the basic materials till the advanced materials. They are captively consuming and producing till the end product. In their customer base also, they work with all the leading manufacturing companies of the world, and they have that customer stickiness because they maintain their cost and quality for a long period of time. In terms of growth outlook, the company is focusing on shifting their product mix from the basic products which are low margin products towards the value added products which have the higher margins. So gradually they are changing their product portfolio and optimizing the value added products contribution in their revenue mix. The demand for aluminum is expected to grow well in the next few years, which will help this company in terms of growth, as the aluminum industry is the major customer for this industry. They have recently done a greenfield expansion of a product called HHCR, which will now come into production, commercial production, and their value added products like Petros and Novares will generate more demand and higher margins for them in the near term. A couple of their value added products like the Petros and the Lincoat are used in the lithium ion batteries, which are going to be very popular in the EV industry. So as the electric vehicles industry grows, the number of batteries consumption will increase, which will generate a lot of demand for these two products which are manufactured by Rain Industries. So indirectly, Rain Industries can be a EV play for you as an investment. Now, what are the risks which this company might face? It is a cyclical industry, so you cannot find a continuous growth. The availability of raw material and the prices of raw material keep varying. If there are any sanctions levied by any countries, the availability of raw material can be a challenge. The prices of raw materials go up and down, which impact the margins of the company drastically. As it's running a global business, the exchange rate fluctuations also impact the margins of the company, and the company has a very high debt, so that is also a risk to be considered from the point of view as an investor. So this is the trend of the energy cost, which is Brent oil and the gas, which increased drastically in the recent terms, which has impacted the margins of the company. Now, after understanding the business of the company, let's talk about the financials. The revenue in the last 5 years has gone up from about 14,000 crores to 17,800 crores, but you can observe that the increase is not consistent. The EBITDA has gone up from about 2,000 crores to about 3,100 crores, but there was a dip in CY 19 and 20. The EBITDA margins in the last 3 years have been somewhere around 16 to 17%, and the profit after tax saw a rise of about 1,000 crores in the trailing 12 months, which was earlier in the range of about 400 to 500 crores. So this is basically due to the rise in the prices of the products which the company is manufacturing. The profit after tax margin is somewhere around 4 to 6%. There is no change in share capital in the last 5 years. The reserves are steadily growing as the company is a continuously profit making company with good cash flows. Now look at the debt. The debt equity ratio is about 1.24, as the company has about 9,000 crores of debt on the balance sheet, which is even more than the last 5 years. So you see that the debt is increasing day by day. The trade payables are somewhere around 1400 crores in December 2021, which has increased to 1900 crores. These are in line with the increase in the revenue of the company. The fixed assets are steadily growing as the company has been doing regular capex. You can also observe that the company has a lot of money locked in their working capital. As you see, the inventory levels are high, and now you see the inventory days are somewhere around 124, which is again on the higher side. Normally about 30 to 60 days are considered as normal, but in this industry the inventory days maintained by the company are somewhere around 4 months. There is a surge in trade receivables also, so both the items related to the working capital, that is the inventory as well as trade receivables, are on the higher side. But the debtor days are quite fair, they are somewhere around 30 to 40 days. The company has good amount of cash on the balance sheet. They have about 1750 crores on the balance sheet. So although the company has a very high debt, in spite of that they are maintaining such high cash levels. So by this you can understand that the company is trying to maintain enough cash in hand because their working capital requirements are very high. But still somehow I feel a part of the cash can be used to reduce debt by the company. The company is doing pretty well in terms of operating cash flows. If you check the last 5 years profits and the last 5 years operating cash flow, they have a good cash flow conversion. They are also generating free cash flow every year in spite of doing capex. So in terms of liquidity, the company is doing fine except for having high debt. The ROCE is somewhere around 10 to 12%, but normally as an investor we expect the companies to have higher ROCEs to become attractive from the point of view of investment. Now let's talk about the shareholding pattern. The promoters hold about 41% stake in the company. Now this is again slightly on the lower side. FIIs hold about 15%, DI is about 1.64%, and the rest of the holding of 41% is in the hands of the public. In FIIs, majorly Monish Paburai Investment Fund is holding the entire stake, and they've been holding it for a very long time. A few of the competitors of the company in India are Himadri Specialty Chemicals, Graphite India. The stat auditors of the company are BSR and Associates LLP, which is KPMG, and the ROE is just about 10% and dividend yield is about 0.5%. So the return ratios, which is ROC and ROE, are in the range of 10 to 12%, which is not very attractive. Now in cyclical industries, it is very difficult to judge the valuation of a company for the purpose of investment. So the best approach to invest in such companies is to invest in them during their worst time when the prices are at the lowest, and exit the companies and during their best times when their prices are at the highest. Because whenever this company or this industry is doing pretty well, the PE appears to be very cheap, but at the same time the prices are high. So if you enter at that point of time when you see the valuations are very cheap, you may end up buying the stock at a very high price. So it's always advisable in cyclical industries to buy the stocks during their worst times, during their lowest possible range of prices, and exit at the top. The same approach has to be followed for this company also, unless going further the share of value added products in the company's revenue increases by a majority and the company performs consistently over a span of 5 to 10 years. So this is about Rain Industries. To conclude, let's discuss the thesis and antithesis points. The management is very ethical and they have a very good reputation in the market. They are one of the lowest cost producers of their products in the entire world. Gradually, the company is shifting their product portfolio from basic products to the value added products. They are innovating and developing new products which are used in industries like the electric vehicles industry. In terms of operations, the size of operations is very large, so it is not easy for a new company to enter this industry, replace their infrastructure and manufacture the products which the company is manufacturing at the lowest cost as they do. In terms of antithesis points, remember that it's a cyclical industry. There are a lot of global macro factors which can impact the business of the company. So unless you are smart enough to track all these companies and their impact, it's not advisable to invest in such companies. The company has high debt and the availability and the prices of the raw material keep on changing. So if you choose to invest in Rain Industries, you have to keep these things in mind so that you don't get stuck in the stock. So that's all. This is about Rain Industries. I hope you like the brief analysis what we have done. If you like it, hit the like button and subscribe to the channel. And if you are not a part of the Telegram channel, do join today. Thank you for watching and have a wonderful day.